DLF has that capability because they have built that over last 4 or 5 decades that they have been doing construction. They have a very loyal client base.
What is the survival metrics there for the developers?
For these developers is something that
One success and one challenge which you can never forget.
There are so many failures.
Buyer expectation on the sizes of a bedroom or a living room is like completely different. In Chennai, people would accept a 10 by 10, but in Coimbatore, they may not.
Delhi, minimum you need 3 BHK carpet, probably 1500. Below that, people don't, aspire of. We see from Kashmir till Kolkata, there are not that many cities that can provide it.
For somebody to put some money at about, say, 30 crores, 40 crores in one particular place, where are we heading towards? Where are we heading by 2030? I'm going step by step. So probably say, let's assume I am a new developer. I go on to split with the landlord, and then probably also engage a private equity for probably my early 20-30% of construction cost. Right. So if these are the two options which you've explained, we've dealt. Now, say let's assume all of these things are great, and how much of importance is marketing and sales in this? Why am I asking? How much of this construction component, right? Determining the right per square feet cost in the overall per se, budgeting marketing cost in for your project, because I see these early developers, they tend to not budget right cost for the development, budget the right cost for the marketing, and still go on to raise it. Thereby, they fall short in terms of their margins, and that's where also I read a couple of places where the project was unable to go through because they were absolutely cost tight, right? So,
see, I'll tell you, probably to give you an idea from the top down, if we are looking at a number of 15,000 square feet, if a project is getting launched in Gurgoen, I'm starting from top down, or could start from there also. Around 4,000 per square feet would be the construction cost if we are looking at a grade A constructor level. So that would give you an idea. That's close to 35-40% of the cost is just the construction. And then there are 2,000 to 2,500 is just the overhead cost of sales and marketing that people usually, the developers would typically keep with them. And another 2,000 to 3,000, in fact, could be more. 3,000 to 4,000 could be the land cost per square feet if you're looking at. So that's where the number comes close to 12,000. And remaining probably would be the margin. 30 to 40% is a margin that every developer minimum keeps. Below that, the project would probably be not financially feasible also for them to be pursuing. So if we look at that number, that is where the sweet spot is. And according to me, marketing and sales is very important in real estate, especially in NCR, because now the buzz here around is for a project to be sell out. If it's not a sellout, probably there is something wrong with the product. By sellout, you typically mean 80% of the inventory should be booked at the time of launch, which is unrealistic, and it's a very typical NCR phenomena that is happening here, because of course the demand is just so high. But then that also doesn't mean, so you have to create the entire first, but that doesn't mean you spend all your budget in marketing and sales only. You have to get the right partners when it comes to all the right consultants when you're looking to conceptualize the project. You have to be signing up with the right architect. Market does understand. People are more aware now. They do their research. So you have to spend a lot of money in your product and then market it accordingly. But it cannot be vice versa, that you only spend in the product and don't do the marketing. Probably that is also something that might not work out for you. And if you're just spending everything on the marketing and all over the city. Probably you have your branding going on. If the product is not that great, you are not with the right location, the product does not give you a guarantee to be a success if you do all of that also. So it has to be the right balance across. It is very important, of course. So like I gave you the top down approach, probably that is the range that they have to work out with.
I, I'm just recalling something what I read in one of your posts, right? You were saying that real estate bubble is there in NCR and it's about to explode and things like that. Right? So, what exactly is happening? Because we are speaking about the marketing and sales and partnering and having the right thing, and also we are talking about a new phenomena called 80% to be sold out on the day of launch. Uh, is it all happening, or is it a false notion or a PR sort of a version which is typically getting built? And being from South, I'm genuinely curious to know this. So yeah.
So two questions. One is around the that particular post. So that in that I had given the brief on the costing bit of it of a project. So that particular why whoever were the weak hens, probably these are those farmers that did not know, like Gurgoen would become such a big metropolitan. But a lot of them, those who are looking for quick money, have shelled out those land much earlier for a few crores. Now these are all those landlords, those who have much investments throughout Gurgaon. They have enough cash flow coming. These are not just those people, those who are asset rich and cash flow poor. Most of it, these are those people, those who know what price they want to sell their land at. If they don't happen, they are the most difficult, by the way, to negotiate deals with. Like professionals have the hardest time because they are very much rooted on the ground, and speaking with them, conversing with them is a tough task in itself. But yeah, these are those people, those you have to probably rub their egos also, and you have to figure out a way. But so these are those people, those who can hold their land for multiple decades also if they don't get the price that the market would be giving. That's why I feel, and they know where Gurgaon is headed. They know about it much more than probably the analysts sitting in their offices, and you know how the market behaves. They are right at the ground. So that's why land cost I don't see going down in Gurgaon, and that's why the costs why they have escalated also. So the post was around that. Regarding on your second question, that are these phenomena? So it's a sweet and sour pill like for developers now. Of course, DLF has that capability because they have built that over last 4 or 5 decades that they have been doing construction. They have a very loyal client base, and there are people those who would just invest in the brand that is DLF. They trust that they have done it. They have done the delivery. So that is one builder that does the sellout. Ashiana and Godrej are somewhere probably. Ashiana is also, but they bring in the project in very limited quantity, 220 odd units. Probably these are those phases that they bring in. That also gets sold out. Godrej is somewhere. I don't know. The company might not be happy, but yeah, they are someone who probably wants to use that entire FOMO bit, but they always will have inventory, later on with them. So a lot of developers of course use it that it's sell out, and there is a FOMO that gets created, but not everyone is able to pull a sell off majorly, and it comes to bite them later on also because people see it behind it when you probably have dealings later on. Many developers are finding it tough also now because then you cannot reduce your price. You also have to create FOMO that only the price has increased. So if you have to bring in the customers at that, there are many customers, those who, if they associate that you are selling it at a much higher level, they will not come to you. So you lose out also a lot of customer in the process. So it's a double-edged sword. The sellout bit, it works with you if your product is at the right place, and is commanding the right price also accordingly, because customers are very smart, they see through it. So that is definitely yeah.
Just say if we remove the top 10 developers from the region, right? Let's probably not pick up names. That's okay. I'm saying let's ignore those top 10, 25 builders, right? They might be competing against each other towards the 70, 80%. There'll be at least remaining few hundred builders, right? After this 25, right? How are they actually? What would be their mindset towards this phenomena of 80% sold out and things like that? How are they coping today? Uh, is that the trend which is going to happen across? Or I mean, what is the survival metrics there for the developers?
So for these developers is something that I had mentioned about the purchase system, that they will reach out to these a little more aggressive investors. Those even without RERA, of course, there are always these bookings that do not. On in reality, things are obviously always different than what regulations allow. So they would reach out to probably these a little bit on the higher risk appetite investors, those who would pick up few units, a few percentage in a project, so they get kind of an assurance that that particular demand is just going to come from this particular investor or these particular channel partners. That is one thing that they do take bookings from investors, smaller retail investors also, that probably they can pick one or two units. The launch price would be probably say 12,000. They would take the bookings at 10,000 if you book it now. So they get some funding around 10-15%, they will take it that time. So this will probably help them do the marketing and all the overhead cost of launching a project. So this is something that these investors, of course, do. And another one would be these developers will not bring their entire project at one go. Like DLF can sell 1,100 apartments worth 7 CR, like all together, but not everyone will do it. So probably these people would pick up the strategy of bringing this in phases, where in phase one probably 25-30% they inventory they will unlock, and then they would of course promise that these guys, we will be launching the next phase probably at a higher price, and that's where the value would be unlocked. So this is typically probably the strategy that these developers, those who are not the top tens, could follow or do follow.
Hmm. Great. So just going back to your career, right? I mean, whatever your use case, what would be the top of the mind challenge which you faced in your entire career, which you can never forget? One success and one challenge which you can never forget.
Very interesting question. There are so many failures, but then, yeah. So I think typically, like I did not have a sales background, because now since I'm a real estate consultant, I do have the information knowledge. Building that trust is something that has been working with me, but doing sales, doing the follow ups, this is something that I definitely lack. And this is a skill that I am working out on. It's not one particular typical failure, but yeah, there are many little deals that do get missed out on if you're not very proactive, and that is one skill set that I have to acquire. My team is also like, so the real estate is everything about is the follow up bit. So that's one gap that I am probably looking to work at. On the success side, like it's just looking back only, like I'm seeing it's the perspective. I think real estate is anyway something that you just can't be talking. It's not always about the real estate. You need to have a perspective. It should be different. A banker could have a different perspective. An architect would have a very different perspective on how things are. Probably someone from a doctor background also would look things very differently. So anyone could be a consultant probably, and but you have to understand that perspective, and it takes time. Only from experience, only from doing multiple deals, probably something that perspective. Because now it is even when I look back, I could connect the dots where everything is aligning up. But it definitely take some time you to build that perspective, to build that ground knowledge of doing deals also, and just to understand the market scenario.
One more thing, like here in South, at least between Chennai and Coimbatore, where I live, if you see the buyer expectation on the sizes of a bedroom or a living room is like completely different, right? Say in Chennai, people would accept a 10 by 10, but in Coimbatore, they may not, right? So, like this, is there anything which is very uh, particular above to Gurgoen or that NCR region, which you feel that okay, this is something very probably you could compare this to Mumbai also. Like Mumbai, we know like how small a two bedroom can be also. So
So that is entirely very different from covering from Mumbai and Delhi market now. So of course, Mumbai, as you just mentioned, the carpet area over there, like you would find 800, 750 kind of apartments. Carpet area, I'm talking about 3 BHK is there in that kind of size. Delhi, you don't get that. Minimum you need 3 BHK carpet probably 1500. Below that, people don't really, aspire also. So what is also happening in Gurgaon is, after COVID, only this cultural shift has happened. For them, these are always matchboxes, these high-rise apartments. Culturally, they always wanted to have their own land, build their own villa, and they did not trust these builders. Probably, that was the scenario till then. But after COVID, that aspect of community living, of getting amenities in your societies, that aspect has picked up here, and that's where you're seeing demand. So majorly from in Gurgaon, these are not first time buyers. People get fascinated, the prices are at 4 crore, 5 crore. Where are these buyers coming in from? Which are the jobs? Like, the employment growth in India, of course, has been stagnant, not that great. Like, at least it was good for immediately after COVID, but it has stopped in last 1.5 years. So when I talk to these people, these are always those people, those who invested in Gurgaon. Probably earlier they invested in 50, 60 lakh kind of apartment. They have doubled or tripled to around 1.5 CR, 1.7 CR, looking at that. So they are coming from a capital asset gain. They are coming from a capital asset sell from there. And that is where they are looking to upgrade it now. They have understood, and it's a phenomenon, it's a network effect also. A lot of people from Delhi also are moving. So earlier, probably they did not have that many colleagues or friends or relatives, those who are in Gurgaon. Now almost every other person that they know has already moved or is looking to move in Gurgaon. So that also gives them that comfort that even if I decide to move now, probably we'll have those people around me. And of course, the social infra, the traffic, everything for Delhiites are better. They at least feel that. And it's not just Delhi. I interact with people from Faridabad, Kanpur, Lucknow. For them, they feel that this is the growing city. This is the next metropolitan that will be the next major hub of India's, at least north belt. If we see from Kashmir till Kolkata, there are not that many cities that can provide employment. And this is the population that we're looking at, around 60 to 70 crore odd people. Apart from Noida and Gurgaon, there are not that many. Of course, Lucknow, these cities are doing, but white collar professionals would only find employment in either of these two cities, and there is nothing really, no other really option. And so that is also something that has come in favor of Gurgaon. So, like I tell you, so sizes, people are here, have money, they have invested in earlier certain projects, they are coming from asset sale. They will offer money, but your product has to be rightly placed. You must have earned that by delivering projects over last few years. And if you provide the amenities, even 7, 8, that's why, like, you'll hear about it. DLF is launching a project, Lux 5. Each apartment would be worth 40 crores. It might not be a sellout, but still, like, just to be having an entire building where each apartment would be worth 40 crore and to be having a demand like that. Of course, there needs to be a demand. That's why DLF is building that project, right? So that it just highlights at the top what a typical Gurgaon or a Delhiite aspire to be, where they want to be. That's why, and real estate isn't just DNA of northern people. People invest here far more in real estate probably than people in Gujarat and Maharashtra. They are more inclined towards stock investments. But here, if you are saving, if you have accumulated some kind of money, your first investment will always go into real estate. Now it depends if you've saved 50 lakhs or 5 crore. It depends from person to person.
No, yeah. I think, see, leaving out Mumbai, if we actually remove Mumbai and Bangalore from the entire India, somewhere culturally, almost I could see similarity in many ways. Of course, Delhi, we don't have 40 crore sort of an aspiration in other places. That is different. But in culturally, everybody goes for real estate first as an investment, right? Gold and real estate is something which has completely been the case. Great. I mean, this is fantastic. So, how is the future going to be? See, why am I asking this question is from this perspective. Like, when everybody goes and keeps on buying real estate, yeah, see, we normally would like to invest in an asset when it is, we would like to double our money, basically, right? Double our wealth. That's where we invest in an asset. So, if I'm investing in, say, real estate at a lower rate, when say I'm putting a 50 lakh for it to become a 1 crore, that's relatively possible, right? For somebody to put some money at about, say, 30 crores, 40 crores in one particular place, for it to get doubled, or is it going to be really feasible in that perspective? Where are we heading towards, right? And this is one side. On the other side, there is a new millennial or the Gen Z who are all thinking of not settling in one city, right? They are going to move. They every 5 years they are switching jobs. Every 3 years they are switching cities, right? People talk about global citizenships and a lot of things, right? With them, probably they may not put in or park monies in real estate. This trend is one side, probably budding. I would say probably budding, right? On the other side, there is something called REIT, and on the other side, we speak about fractional ownerships, right? So these are very, very nascent stage, yet to bud, or some ideas which are popping in the market. But on the other side, as I said, one side we have 40 crore, 100 crore worth of homes, and people go crazy on day one, day five, still buy it. So this is today's market. But how do you see from your perspective as to where are we heading by 2030?
Right. See, definitely, like you mentioned, the returns and real estate investors also probably will have to adjust to new reality now. The prices that there were probably, I was covering Mumbai and Gurgaon, and probably, but I can extrapolate it throughout pan India as I read it. So I was just mentioning a lot of the rally that we have seen in last 3 years. I feel a lot, almost majorly, most of it was a catch-up rally, which we did not see from 2014 till probably 2018, 2019 onwards. Since then, what had happened was the cost of doing construction had increased. So naturally, the prices had to move up, but it just people had launched their projects and were not just getting the demand. So that 4 to 5 years were a dead period for real estate. So that's why the spike has been so harsh, so steep, that probably these values were just catching up with the cost of it. But that is not something that we will see similarly now. We are probably at the fairly valued stage, or probably little higher, is my understanding. So your expectations you'll have to probably tone down. If in last 3 years your money has doubled, that might not be a case similarly. In fact, now probably we are while we speak, there are already articles that probably the sales numbers are have started to slow down. I am reading it about Hyderabad. NCR is still buoyant, where YTS year to sell inventory is 1.6, which is one of the lowest it has ever been. For Hyderabad, it has gone 4. So you have to be very cognizant that not to be investing. Real estate is great, but not to be investing in one particular class, which is apartments. So probably you have to explore now if residential investments have gone up, not to follow the herd. Be more smart. Probably land deals somewhere, somewhere where the new city would come up. Probably that is where one could look at commercials, or in fact certain REITs also, like you mentioned. Yes, they are at a very nascent stage. SEBI has also come out with now small enterprises REIT, so it's developing. But I feel a lot of value will get unlocked here, where these people can do transactions that a retail investors cannot do in their capacity. They will not even get to know. Wherever the real money is made, these deals do not even hit the market. They always get shelled off from people, those who are always there in the market, those who have the money to go behind it, which retail investors naturally don't have it. And how things are in Western world also, probably I see a lot of these REITs will become pretty big, and they might just acquire the entire buildings together, and then they would be doing the leasing bit of it. And like how you mentioned, so millennial is showing two different sides of it. There is one extreme side of it, those who are probably doing well. There are many articles, there are many studies around it. The age of buying apartments has reduced from earlier when they were buying between 30 to 35. A lot of people in the 25 to 30 also has invested in real estate, because that many tech entrepreneurs, probably tech employee professionals are earning that kind of salary. That is so that is one aspect of it. Another is those who are absolutely letting it go. They always want to rent before buy, or rent over buy. That argument will always go. But probably REIT is something that these guys can always look at. There will always be demand. Our country is like our population is so big that we cannot channelize that particular millennial is only thinking in that way. Even if of the 20-30 crore millennial population, even if 40% or even 20% of them are looking to buy apartment, that's also big, very big number, depending in different brackets, of course. So there are always going to be people, those who are looking. But yes, return expectations is definitely something that will have to be toned down, and far more due diligence would have to be done on builders' background now. Because I feel even after RERA guidelines and everything, not all projects will make it through. That's just the natural bit of it. There is always going to be human error. There is always going to be chances of fraud, scams when you do it. When you see money at that kind of level, people always tend to do certain things that don't follow the guidelines, don't follow the numbers, or sometimes they are just not compatible also to be managing that kind of a project. So earlier probably they had more margin, but now similarly they might not have it because the costs have also increased. That's why it's very important now which asset class you do it in and which developer you pick it up. So these are two things that people will have to really be very careful now when they would be looking to invest. But to think of it, our urbanization, our growth, the entire. Also, I would want to mention one more thing also. If we see it from Gurgaon also, though it's a comparatively new city, probably Bombay, Chennai, Bangalore don't see it similarly, but there is hardly any quality housing supply we'll see. The construction that was done pre-2010 was very poor. At least I can talk about in Gurgaon. It was always red brick that have seepages and leakages, shows that people are moving out from them, which is not the case with these new high-rises where the amenities and all these aspects are there. So quality housing is still very limited in supply. And these things take 5 to 6 years minimum to come into the market, right? So before that, and a lot has changed in last 5 years, and a lot more will change. Our paying capacity per income will increase. The world is looking at India, so probably the wealth that we will create in the next 10 to 20 years will be massive. Our base was so small, and then when we have done so good in last 10 years, so that growth will be there, but not all developer, not all micro market will similarly, provide you the similar sort of a return. So that's why you have to be careful. But on a longer term, I am very positive about real estate. You just have to be smart enough which asset class in real estate and which particular micro market you go ahead with.
Fantastic. Last question. Looking back, what advice would you give yourself or to an aspiring real estate professional who is probably looking at real estate today? Um,
Oh, I would definitely work with someone who's a master at his craft, who's done it through, even without caring for the money. I think, of course, initially when you're young, you are chasing after money so much that sometimes you want to do everything by yourself, run by yourself. But there is that learning phase which only comes. Nothing, you cannot learn everything from theory, from looking at reading books and looking at YouTube videos and all. You have to do deals, you have to do the groundwork, and those deals can only happen if someone is a very senior in the industry and probably you work with them. There are so many aspects in every deal, like everything is so different. Every buyer is so different. You have to work with them accordingly, and that's where you learn. So the only way to learn is doing that many deals, which probably in the initial phase, of course, people will not come through. So if I would have to go back just to enhance my learning curve, I would want to align myself someone with an industry stalwart, just to learn from them. Apart from that, what else? Probably work on the branding. Sorry.
you would have started real estate much before.
Much earlier, definitely. Yes, that's one thing I would have liked to do immediately after college. That I always think, I keep telling my wife also that I wish I had done it. The first venture of mine into real estate, and after that, probably I wish I never went into corporate field. What I missed out probably on those 5 years, or you always look, probably grass is always greener.
Why is that? Could you explain why?
Why I feel that probably this is absolutely something that I love, I enjoy. Those 5 years when I was working in a corporate, it was not something that I was enjoying. When you meet your passion, what you want to do, the results that come out of it, there's nothing like it. And that's what, it's not for anything against corporate, but if you feel that your job is giving you that sort of a passion that keeps you driving every day, you're just obsessed about what you do, That's where the real gain comes. That's where the real output also come from. So that's why I feel probably I had started, because this I feel is what I always wanted to do, and that's where I am today. So that's why I feel those probably 5 years I would have gained much more, I would have done so much more if I had started early.
And you were actually starting about some branding, something you were about to say.
Right, right. You were asking what I would advise probably a realtor if they're starting now. Work on your branding. Content is, of course, the game. It has helped me tremendously to build a personal brand on Twitter. Not just the direct leads that come to you. It's just the kind of people you meet. World is it's a fantastic opportunity sitting. You just don't know where the next opportunity would come into you, but you have to make sure learn something first, build a perspective, and then start putting it out there. It's very important to connect, and you particularly associate with particular kind of an investor and continuously talk to them about it, and people will resonate with your views. You have to build online. No more you can sit and wait for opportunities to come to you. You have to go and chase them, and that's why branding is extremely important. The trust factor will come from you. An NRI sitting in Australia, he would otherwise be calling someone else. If they see a personal brand of you online, he will trust on you far more than he would do on just a random call. So that's why, at least not just in real estate, I think just in general, personal branding is something that everyone should work on. It has benefited me tremendously. So far, I have not had to buy any other, digital plans or leads plan, anything. It keeps my personal branding, keeps my top of the funnel going, and it has worked for me. It can work wonders for others. So definitely that is something that one should look after.
This is a fantastic, I would say. I mean, this is almost seventh or eighth episode of interview I'm doing. This is a very unique combination of career you've had, and really respect for the project management work that you did, and then the investment. I mean, investment banker role, and then now you choose real estate. I'm sure next 5-10 years is going to be a tremendous journey ahead for you. With whatever I said, all the very best, and grow from strength to strength, and do the best. And probably you should be the number one realtor, which we are likely to see in the coming days.
That's the aim. Let's hope so. Thank you so much. Had a great time talking with you, Arun. Had a pleasure. Thank you so much.
Thank you, Gaurav. Thanks.